Hey everyone, and welcome back to Ticker Shock, your 7-minute download on the stocks that matter most. Today, we're diving deep into a company that's been the undisputed king of the AI revolution, NVIDIA. But even kings face challenges. So here's the big question. Is NVIDIA about to stumble because of a chip that was supposed to help them navigate new trade rules? Let's find out. All right, let's get straight to the news that's got the market buzzing. NVIDIA has reportedly instructed its component suppliers, including giants like Samsung Electronics and Amkor Technology, to cease production of their H20 AI chip. This isn't a minor hiccup. This chip was specifically designed to comply with U.S. export restrictions for the Chinese market. So why the sudden halt? It's all about pressure from Beijing. Reports indicate that Chinese authorities have been urging local tech companies like Tencent and ByteDance to suspend their orders for the H20 chip, citing potential security risks. NVIDIA has denied these allegations, but the message from China is clear. They're pushing for domestic alternatives and scrutinizing foreign offerings. This comes after a complex dance where NVIDIA actually regained approval to sell these China-specific chips in July, but now this pushback is forcing a production pause. The initial market reaction? NVIDIA shares dipped about 1.2% in pre-market trading on the news. Now, for those of you who might be new to NVIDIA or just need a refresher, let's break down this tech titan. NVIDIA, headquartered in Santa Clara, California, is a powerhouse in graphics and compute solutions. They're not just about gaming anymore, though their GeForce GPUs are legendary. Their business is broadly split into two main segments: graphics, which includes gaming, professional visualization, and automotive platforms, and compute and networking, which is where the real AI magic happens. This latter segment houses their data center solutions, which are the engines powering AI and high-performance computing. Financially, NVIDIA has been on an absolute tear. For the fiscal year ending January 2025, they raked in a massive $130.5 billion in revenue, a staggering 114.20% increase from the previous year. And the growth has been consistent, with revenue jumping over 125% in 2024 and over 25% in 2023. Their primary revenue driver is by a mile the data center segment, which accounted for an incredible $115.19 billion, or 88.27% of total revenue, soaring 142.37% year-over-year. Gaming, while significant, brought in $11.35 billion, or 8.70% of revenue. Geographically, the U.S. is their largest market, contributing $61.26 billion. Singapore comes in next at $23.68 billion, followed by Taiwan at $20.57 billion. And China, which is central to this H20 chip story, contributed $17.11 billion to their revenue in the latest period. NVIDIA's operational efficiency is also remarkable, boasting a gross margin of over 70% and an operating margin of over 58%. So, how does this H20 production halt actually impact NVIDIA's bottom line? Let's break down the math. The news directly impacts NVIDIA's biggest moneymaker, the data center segment, which makes up over 88% of their business. We're estimating a 7% revenue decline for the data center segment because of this H20 chip issue. This is based on potential lost sales and the halt in production for a chip specifically designed for China, a significant market. Now, here's the key part: operating leverage. We're using an estimated operating leverage multiplier of 2.0 for NVIDIA. That means for every 1% change in revenue, earnings are expected to change by approximately 2%. So, that estimated 7% revenue hit to the data segment, which translates to about a 6.18% overall revenue hit when you factor in its dominance, multiplied by our operating leverage of 2.0, gets us to a potential 12.36% hit to earnings. Now, let's put that into dollars using their forecasted EPS of $4.45 for the fiscal year ending January 2026. That 12.36% hit to earnings translates to an estimated reduction of about $0.55 per share. We've also looked at different scenarios. We see a 20% chance of no significant impact, a 60% probability of this moderate impact where we estimate a 0.55 EPS hit, and a 20% chance of a higher impact, potentially around a 0.79 EPS reduction, if the situation in China worsens or lasts longer. Now, looking at the market's reaction since the news broke on August 22, 2025, we saw that initial 1.2% dip in pre-market trading on the news. However, many analysts maintained positive outlooks, with some even raising their price targets. This suggests the market might be viewing this as a temporary setback, or that NVIDIA's overall demand is so strong it can absorb this localized impact. But it's important to note the initial reaction was negative, even if the subsequent analyst commentary was largely bullish. So, to wrap up the analysis, is this good, bad, or neutral news for NVIDIA? Based on the immediate financial impact and the disruption to a key market, this is unequivocally bad news. While the company's broader strength might cushion the blow, a production halt on a specific, albeit important, chip for a significant market is a clear negative. Now, for my take, I'm issuing a hold recommendation on NVIDIA right now. Why a hold? Because while this news presents a clear headwind, especially in the crucial Chinese market, NVIDIA's dominance in AI hardware and software is still incredibly strong. The market's reaction, while initially negative, has been tempered by ongoing demand for their other products. It's a wait-and-see situation. The company is actively developing new chips and navigating complex geopolitical waters. I want to see how they manage the China situation over the next quarter or two before making a more definitive buy or sell decision. That's all the time we have for today on Ticker Shock. If you found this analysis helpful, please hit that like button and subscribe for more regular deep dives. Remember, this is for educational purposes only and not financial advice. Invest smart, and I'll see you next time.